Prophet, how we doing, sir?
Pretty good. How about yourself?
Nice. We're doing great. Yeah, we've been excited for this convo. I mean, for a while, but especially this week, it seems like futarchy's kind of bubbled back up into the kind of zeitgeist. So
He was ignoring us for forever, and then I had to go onto the timeline to take an alternate position, and then boom, right on. We love it.
Yeah, I
We
thought
love
that was great, actually. Yeah.
it.
nice. You're the co-founder of MetaDAO, which is a futarchy-based launchpad for unruggable ICOs. So, wondering if you could just kick it off by giving us a quick overview of what futarchy is and why you're so excited about it.
Sure. So futarchy is essentially governance by markets. So like historically, if you're familiar with DAO governance in crypto, it's like people vote with their tokens on what should be done. The idea behind futarchy is what if instead of voting on what should be done, we traded on what should be done. And so what that means is like essentially you trade in these markets of like if this proposal were passed, what would be the value of this token? So like if Uniswap is deciding whether or not to turn on the fee switch, that would be made in a futarchy with like people would trade what would be the value of Uni token if you turn on the fee switch. And if you didn't, and if the market says that makes the token more valuable, then you do it, and if not, you don't. So that's like high level of futarchy. And then what MetaDAO does with that is, this like unruggable ICO concept, which is essentially like if you look back at most ICOs, like most of them rugged, as in the team just like took the money. Maybe like could be over a long period of time, like a slow rug, but that's been a huge problem with ICOs. And you at least you solve a lot of that if instead of just giving the money to the team, you give it to this governance mechanism. And have the team like theoretically spend from that, but not have like full control to just take it and disappear. So yeah, that's kind of futarchy and MetaDAO.
So really, I mean, probably lots to get into around the platform because I'm really interested in sort of the various ways you've tried to bring this to market. But like the big question in my mind, and I think the thing I took exception to is just the idea of how unhelpful decentralized governance is for almost all things early stage. And so I'm curious how you sort of square that, and maybe it's more a question of how and where this type of governance needs to be applied, because I think we've seen that the challenge of consensus-based decision making in investment DAOs. I think there's a project that launched on your platform that kind of was doing something similar. I'm not sure how that has gone, but definitely if you're thinking about sort of the 0 to 1 phase of these projects and companies, that opening up decision making to a group of people who have far less context and maybe far less incentive long term has just proven to be a very, very challenging thing. And I think Vitalik talks about decentralized governance as being the best of the worst options, kind of like democracy for these open protocols that need to have some governance, but ultimately still struggle from the challenges of building consensus in an open way on a specific product. So how do you square those things, and why are you sort of confident that futarchy can be used here?
Sure. So I'm not a decentralization maxi, or even like a DAO maxi. I see futarchy and governance as a tool to solve a specific problem, and not something that should just be like exerted everywhere. In fact, I would say probably very few decisions should actually be made by the markets. I mean, like recently we added a feature such that entrepreneurs can just start spending their burn rate without needing to raise proposals. And so like, yeah, if you look at OmniPair, which was the recent project that raised on MetaDAO, they haven't done a single proposal yet. And that's just because, yeah, the founder has a burn rate that he can spend, and he's just spending it and going to build the product. And he's not asking the market, oh, should like the background color of the website be this color or this color? He's just making those decisions and executing. So I don't think it's like a huge encumbrance on the founder, especially when you consider that like startups already today have governance, right? Like usually once you take money from other people, or specifically once you do like a round with venture capitalists, you have some board, and you can't unilaterally make all the decisions anymore. And so I would think of futarchy as essentially the board, where like today, yeah, if you want to make a really big spend, then that today has to go through futarchy because we haven't figured out a way to then make big spends in a unilateral way that doesn't lead to rugging. And if you want to issue new tokens, that also has to go to futarchy. But like, how often are people doing those things? Like, probably not that often. So yeah, I think ultimately still the founder is making a lot of the key decisions, and I don't think it's like a huge encumbrance on them.
Got it. So it's much more about like token holder protections than governance.
Yeah, exactly.
Got it. Cool. So yeah, I think you tweeted a couple days ago that you're going to bring back ICOs so fucking hard you're not going to believe it, but that the legal component of unruggability is the main bottleneck to that happening. Can you just say more on that and what you're exploring here?
Yeah, so we want today with MetaDAO, it's like a permission process, as in if you want to raise on MetaDAO, you actually got to come talk to us. And there are some strategic reasons why we want to do that, why we've wanted to do that, but there's also this legal reason of so another way that projects can get rugged is if it actually does make money, but then instead of that money going to the token holders or like being in some treasury that the token holders control, and so just goes to the team. And that's actually happened with a lot of projects. I mean, Uniswap is the known example of that. And so we also have this legal component where when you raise a MetaDAO, you put all the intellectual property, so that's like the AP, the domain names, Discord server, etc., into this legal entity. And that legal entity has an operating agreement that essentially gives control to the on-chain governance system. And that is important. I think that's really, really important. And so we want to make it so that anyone can do ICOs over the long run. But then the question was, okay, how do we make this legal side work? Because like, if you want to have it such that it's not as maybe as easy as going to Pump Fund and putting in a few like a ticker name and symbol, but close to that where you're on a website and you're clicking through a few buttons and filling in a few forms. How do we create a legal entity like that, like very easily for those people? And that is not like a trivial problem, but right now we are working through it. I'll just say, we have like someone we think we figured out a structure that works. It's called the Cayman SPC, and we'll probably announce soon like who's leading that integration.
Nice. I'm very interested in your take on the current internet capital markets debate. I think Ben Pasternak of Believe tweeted that launch mechanism is not the primary source of the challenges facing ICM. And you have been very public in saying that the mechanism is important because founders want high quality cap table and upside for early employees. I think I've seen just people be one-shotted by this idea that internet capital markets equals meme coin launches. And even people asked, I saw a poll yesterday saying, which of these launch pads will the most serious projects launch on? And I was just like, brother, like absolutely none of the ones you've listed here. So what's wrong with the internet capital markets debate right now? Why does issuance matter? And just interested in your take here.
Sure. So yeah, I thought that the Ben take of like the mechanism is not important. It's kind of silly because to me that is the core product of the launchpad. Like, it's not the mobile app. It's not the pixels on the screen. It's how the thing works. And how that thing works actually affects a lot of things. So one example is with a bonding curve. At least the way that the bonding curves are configured today, you're generally able to snipe a reasonably large percentage of supply for a small amount of money. And as a founder, I can tell you, it's probably not going to be easy to convince a founding engineer to say, come work for your project for 4 years to earn 1% of the supply, when someone was able to buy 1% of the supply for $150 on the bonding curve. Like, that would just be crazy. I mean, maybe it actually wouldn't be crazy, but that's just not how human psychology works. We'd be like, no, I'm not going to do that. And then you're also not raising money, really. Like, I think the top Believe project has raised somewhere around 500K the last time I looked at it, which was Dupe, that's like a pre-seed round. I mean, it's not terrible, but if you look the median projects, some of them are raising like 20K, 50K, which is not even going to cover really your legal bill generally if you're building crypto, or even sometimes if you're building outside of crypto. And so basically, I don't think that these, like if you look at Launch, I believe, or Heaven, yeah, they're not really purpose built for ICM. They're essentially casinos, and they like brands using this ICM to make people feel better. And yeah, so like, yeah, I guess that's my core problem with the current mechanism. We can get into like why I think our mechanism is better, but yeah, that's like, I basically think the mechanism is important, and the current mechanisms are not purpose built for like real entrepreneurs that are trying to build a business.
I very much agree.
Yeah, 100%. So Joel John tweeted that venture funds should be run as futarchy with the GP shares being the liquid-based asset. And I think a bunch of the replies to that tweet were mentioning the failure of Mountain Capital, or at least the struggles they had. So interested in if you can tell us more about what happened there, and if this is a use case of futarchy that you're excited about.
Yeah, so I'm actually skeptical of this use case, although I'm still open-minded because of Mountain Capital, which, by the way, I don't see it as like a failure. I kind of see it, I don't also see it as a huge success. The huge success would have been a raise money to build this fund and then like deployed it really effectively and then made a bunch of money for the LPs, essentially, like the people who invest in the ICO. What happened instead is, yeah, so it raised money. There weren't really any deals proposed to the DAO. Like I think in the first 2 to 3 months, there was like one serious deal. And so the market kind of lost confidence, the market being like all the people who invested in this ICO or like believed in this thing, kind of lost confidence in the ability of the DAO to source deals. And then it pretty much went through like a gradual liquidation process where like, yeah, so this proposal to Mountain Capital right now is probably going to pass, which is basically just like closing it down, returning all capital back to investors. So like if you had invested in the ICO and then done nothing and just waited until now, I think you'd earn about like 8% APR. So like not terrible, like you're getting your money back plus a little extra. But yeah, I think the main problem, like a big reason why deals were hard to bring to the DAO was this idea of like founders who are doing these private rounds don't want all that information to be leaked to the public. And I can especially imagine it's frictionful to have rejections leaked to the public, right? If you're trying to close a deal, you want momentum on your side. Like that's really what you're trying to get. And if you have this public rejection where this thing is said, no, we're not investing in that, like we think it's a bad investment, that could kill your momentum. Maybe if Mountain Capital was like an 100 million or $1 billion fund, then people would be like, okay, well, we get enough money from them that the risk is worth the reward. But it was at the start, a $5.8 million fund, which I think is not enough to like have that sort of leverage. So
what
yeah,
about the specific idea of applying futarchy maybe to a more traditional investment structure, but where the GP shares are the base asset? Is that even a reasonable take?
I think, yeah, it'd be hard for this reason, because like you got to raise proposals for them to be traded, they have to be public, and the public part is hard for founders.
All right, well, let's zoom out a little bit, because my sense is you have a big vision here. I think you've been building towards this vision for a while. We're seeing the ICO launchpad and maybe some of the legal innovations there be the core focus right now. But if we zoom out, what is the long-term vision for MetaDAO?
Yeah, I mean, market-driven civilization would be one way to put it. Like, yeah, I think futarchy today is not that smart. Maybe it's like an 80 IQ. Maybe futarchy is 80 IQ. Like we need still to make improvements on the technical side, and then also just liquidity needs to form around the market, like with any new market. But over time, I think it will be really smart. And it will be both smarter than like a manager of a company and also less biased, right? Like there's this classical principal agent problem where a manager of an enterprise will have different incentives than the enterprise itself. Like empire building is a classic example of this. And yeah, so I think we really can actually live in a world where all of our major institutions, from our companies to our governments, are controlled by this futarchy mechanism, instead of essentially today all being by voting, right? Like either shareholder voting or democracy.
Trillion
and
dollars
yeah,
of stock-based comp for Elon? That'd be the fascinating futurarchy.
Yeah, it would.
Okay, last question before I let you go, because I think often it's the weirdest things that break free, especially in crypto. What is the most outlandish idea that you have if you could apply futurarchy to?
That's a good question. I feel like the idea itself is so outlandish.
Anything.
Yeah. I don't know. I think, well, yeah, I'll answer a different outlandish thing, which is just like the mechanism itself does have this kind of alignment problem where, yeah, like markets themselves, like one example is with a market, you're not necessarily incentivized to trade against nuclear destruction because no one cares about the price of a contract if the world gets destroyed. And so, I mean, yeah, it would be pretty interesting to see a country governed by futarchy because like you could get some alignment issues there.
You talking to the Praxis people or what?
We're not talking to them, but I mean, yeah, this has been like a long-term thing.
All right, man. I mean, it feels like 15 minutes is not enough with you. Appreciate you hopping on and at least doing your best to expand our understanding of where this might be used. Very interested to see what you guys end up with from like a legal side of things, because it feels like launch mechanism plus deeper protections on that side and actual value flowing back to token holders is probably the big unlock that drives us to the next level here. So maybe when you have that figured out, we'd love to have you back on.
Yeah, thanks so much for having me.
All right. Thanks, Proph3t.